Welcome to Trading Nation. I'm Scot Wapner, joined now by John Stoltzfus, Oppenheimer's chief investment strategist. John, welcome. It's good to talk to you today.
Hey, Scott. Good to be here.
I'm wondering what you make of, let's just take today. The trading already has been all over the map. What do you make of it?
Well, I think we're right about where we should be based on the fact that we've got this whole business about tariffs and is there going to be a trade war? Is there not going to be a trade war? You've got the transition at the Fed, normalization of interest rates. Plus, on top of that, we have an entire transition that's beginning to take place related to technology where we're seeing social media might come under regulation. So a lot of things happening, a lot of moments of thought. We don't think it ends badly, though. We think, if anything, this is right about where it should be. A lot of action.
I'm somewhat surprised that you still have a 3,000 point target on the S&P.
Yes, indeed, sir, I do.
You just said you don't think it ends badly. That is very optimistic.
Well, what we think is we've got a good opportunity to see the trade issues resolved. Both countries really wouldn't profit from a trade war, particularly China. It's the one with the huge surplus. And I don't think it really wants to stop buying our grain, not our grain, I'm sorry, our soy. We're one of the largest sellers of soy, as I understand it, to China. They'd have to go elsewhere to get it, and they're probably at a higher price. So we think this will be resolved sooner than one expects based on what we've seen in the last few weeks. In addition to that, the slight slowing we have seen in the economy, even though today's ADP number was pretty hot, overall, a bit of slowing in the economy should keep the Fed on pace to keep raising, normalizing rates at a modest pace. And then we've got first quarter earnings around the corner in about a little over a week and a half. We think that's going to come in pretty good. We think stocks will work their way to 3,000 by the end of the year, Scott.
Yeah, I'm just wondering how we're going to get 300 more points on the S&P if, as you said, tech stocks have been falling. If they don't recover, I keep looking at bond yields. They're falling. That's not good for big groups like the financials. Where's it going to come from? Well,
it'll likely come from a combination of two things. One is improving earnings. Earnings keep coming through. We've had 5 or 6 quarters in a row now with earnings expanding. We should see an increase in earnings growth coming up ahead. But in addition to that, what we would have to expect is that the market is likely to calm down once it gets a good signal as to some resolution that's livable within the trade area, and we get to see the effects of tax reform come on board. There's a lot of things. Also, you may remember in 2016 the market was down 10%, and we still made my target when it came back. So we're looking for another good year here.
All right. We have many months to find out if you're going to be right. It's nice speaking with you, John. We'll see you soon.
Thanks, Scott.
All right. My thanks to John Stoltzfus. He's the chief investment strategist at Oppenheimer Asset Management. And thank you for watching Trading Nation today. I'm Scot Wapner. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.